And it's another day to make money right here in Lagos, Nigeria. The markets are gyrating. Here's what's coming up in the next 55 minutes. Startups in Africa raised more than $1.4 billion in the first half of 2025. And we get an outlook for Nigeria's economy for the second half of 2025. Will inflation go lower? An International Monetary Fund says for Nigeria to sustain economic reform momentum and safeguard fiscal stability, the federal government must fully recover fuel subsidy savings. It's great to have you join us. I'm Ladi Williams. Let's kick off now what's playing out with the markets. And just from what we covered earlier today on Business Money, we're still seeing pressure there for oil prices. It slipped as the possibility of U.S. tariffs that's been reinstated. That's raising demand concerns ahead of an expected supply boost by major producers. Then we're seeing Brent react there, 0.35% down. It did try to get back above that $70 level, but got a resistance around $69 per barrel. WTI crude, that's trading at $67.25 a barrel, down 0.30%. So we're seeing that gap again, trying to close back up. Both contracts had hit one-week highs yesterday as Iran suspended cooperation with UN nuclear watchdog, raising concerns a lingering dispute over its nuclear program that could again devolve into armed conflict. So we're keeping an eye on that one there. To the metals market now, see gold prices are steady in Asian trade today after 3 days of gains as investors turn cautious ahead of key U.S. payroll data for clues on the Federal Reserve's policy outlook there. And we see it's mostly red on the screen. And big drop there we're seeing with platinum, about 3%. Spot gold, marginal, just keeping steady there in U.S. gold futures. But the lone gainer right there for the metals market, we're seeing spot silver there, holding up at $37. This one's been creeping up silently from the $33 level, and looks like it might be making a run for that $40 per ounce level. Definitely keeping our eyes out for that one. Then platinum, a big drop there, 3% to $1,390 per ounce. We see the Speaker of the House of Representatives, Tajuddin Abbas, says the lower chamber will introduce stricter licensing process in the country's mining sector to combat illicit resource trade and disrupt funding channels for insecurity. He made a statement at the 8th Annual Conference of the Network of African Parliamentarians on Defense and Security Committees in Abuja. The Speaker also mentioned that poor regulation of extractive activities that breeds corruption and funds violence, particularly in regions rich in gold, oil, and other minerals. And to financial services now, Guarantee Trust Holding Company, the parent company of Nigeria's biggest lender by market value, will list in the UK after raising $100 million in a share sale. In a regulatory filing, the bank says the shares sale to institutional and qualified investors is part of an ongoing effort to recapitalize its main subsidiary, that's Guarantee Trust Bank PLC. The move is in line with the Central Bank of Nigeria's requirement that all lenders with international banking licenses raise their equity capital to a minimum of 500 billion naira. That's about $327 million by March 2026. That's coming close. Well, the listing in London represents a pivotal moment in GTCO's growth, reinforcing their position as a forward-thinking African financial services institution. And that's according to the Chief Executive Officer there, Mr. Segun Agbaje. The holding company, which is already listed on the Lagos-based Nigeria Stock Exchange, is the first lender from the West African nation to list on the London Stock Exchange. Bringing the three number of Nigerian firms trading in London there. The others are Seplat Energy PLC and Airtel Africa PLC. So they're now three. That's number 3 at this point. Meanwhile, the Nigerian Exchange Group, a leading integrated market infrastructure provider in Africa, has successfully secured a multi-million naira funding from DEG Impulse. That's a subsidiary of Germany's DEG under the KfW banking group to kick off its flagship NGX Net Zero program. The agreement signed in Cologne, Germany under DEG's Develop initiative marks a pivotal advance in NGX strategy to drive low-carbon development and reinforce climate resilience. within Nigeria's capital market sector. Through collaboration with global climate partners, including Africa Foresight Group, NGX Group will support companies who develop credible transition strategies and carbon projects that generate verifiable credits, bolstering both economic resilience and green investment across the Nigerian market. And earlier on Business Morning, I had a chat with Dr. Ayodeji Ebo, the Managing Director of Optimus by AfriInvest. Spoke about major rallies in the Nigeria stock market so far for the first half of 2025 and how to navigate the remaining part. Take a listen.
The expectation was that the non-financial stock was going to deliver. Well, even though we saw that the banking stocks also moved up, but we're expecting that there would be no major movement there given the new shares that they were going to list. But you can look at some of like the beta glass you mentioned, you would see that the sector where they play, it's like a monopoly and they are going into significant expansion. So in the last 2 months is when the price moved significantly because of the area where they play, and they're also even trying to export. So for most companies that are producing, you see the likes of Okomu, they may not feature here, Okomu or Presco, that also moved significantly. The product, the business that they do is also significant. But I would also advise investors this period, because what we are seeing in the market now is that because of the market gyration that we're seeing, investors are also buying stocks that don't have fundamentals. I call it betting with the hope that maybe it will sustain that bull run. These are some of those that at the end of the day, if there's a pullback, they have negative experience around the market. So investors should understand the company they are putting their money in, understand the business that they are doing. And when you see that they're strategic, the products that they sell are very unique, and competition, especially leaders within that space, then you can be rest assured that that stock or that company, even if it's not moving now, over time, you would see that it will also gain. You see like of MTN that started very slow, gain almost 100%. And now, so these are companies that investors can see, you understand how they make money. And if you buy the good names and you hold good names, it will definitely deliver over time.
All right, let's draw some insights now from the AfriInvest H1 2025 Macroeconomic Review and H2 2025 Outlook Report, aptly titled Silver Linings, Statistical Gains, Social Strains. This comprehensive analysis delves into the performance of both the global and domestic macroeconomic landscapes, examining key indicators, market trends, and policy development. So joining us to help unpack this, we have Damilare Ashimi, who's a macroeconomic strategist at AfriInvest Research and Consulting. Great to have you on the show.
Good afternoon, Ladi. Thanks for having me.
Good afternoon, Dari. Great to have you as usual. But, we're seeing, this is the time to, take stock and kind of, predict, what's to come, at this time with all of the uncertainties. And we're seeing the IMF, they've downgraded 2025 global growth projections about 2.8%, citing reinflation risk, geopolitics, and supply chain challenges. So what are the most significant global headwinds that could continue to impact the economic performance in H2, from what you've seen play out in the H1?
Yeah, thank you very much, Ladi. Well, thanks for having me on this show. I mean, you've actually mentioned the major theme that has been shaping and will shape global economic momentum in the rest of H2, and that is geopolitical tension. After the pandemic in 2020, there was reflation across the globe. Central banks injected a lot of liquidity, which helped reflate the global economy in 2021. And the resultant effect of that massive injection, above 15 trillion at some point globally, led to inflation, which was the global theme in 2022, 2023, Yes, there was also Russia invasion at some point when it invaded Ukraine. Truncated flows of trade, global trade, and what have you. But at the time, we thought that the global economy was having a sort of convergence in terms of normalization of some of those initial concerns. Then geopolitical tension began to take a new turn, both in terms of physical warfare and in terms of trade war, because whether it is tariff war or the one that involves carrying gun, is still geopolitical tension, because when countries that normally trade with each other before seamlessly began to input impediments, then there is a knock-on effect, especially because the countries that are at the forefront of this development are the major powers. You talk of the US, you talk of China, you talk of the European part of the world. So basically, the major risk now that the global economy has is geopolitical risk, which has both the form of tariff war as well as physical tension, like the one between Israel and Iran over the couple of weeks, which holds, a sort of negative outlook for oil market, you want to say, because yes, a disruption from Iran can cause a spike in price. But again, following the experience of what happened to Russia, a lot of countries have, somewhat looked for a better alternative to meet their needs. And that's why, unlike when Russia invaded Ukraine, the prices spiked to above $100, we didn't see the same kind of thing between Israel and Russia, even before a sort of ceasefire agreement was reached, because Trump has said, drill, baby, drill, drill. The US is pumping as much as possible. So basically, the risk around the globe, which is around geopolitical tension, is very dynamic, and we think that will continue to be what will shape every other factors going into H2. To shape trade development is shaping it. Global growth has been shaped, just like you mentioned. And when global growth is shaped, the simple implication of that is global demand will sink. Now, for Nigeria example, our largest crude oil buyer are India and China, and because of the underwhelming expectation around their growth, it has been affecting our crude oil sales, coupled with the fact that prices are below our budget benchmark. So basically, geopolitical tension, either in terms of tariff or physical war, is the biggest risk, which can also bring back the issue of inflation at any point that the global economy is facing heading into H2 properly.
Mention drill, baby, drill. And I guess another thing, Trump wants is cut, baby, cut. At this time, we've seen many
Absolutely.
central bankers, including the ECB, SARB, they've cut rates in H1 2025, while the US Fed, they've held steady. How do these, divergent monetary policy paths in major economies, how does that influence, global capital flows, particularly towards emerging markets like Nigeria?
So I think emerging markets like Nigeria are more sensitive to what happened in the US than the rest of the world. The reason is simple. The USD is the global currency of trade. The US is the largest economy. Yes, in recent years, remittance number shows that a bulk of our remittance comes from the UK. But the reality is that most of those funds, when they are to come in, they still come in the US dollars, unlike pounds. So basically, and when you look at Nigeria foreign investment dimensions, inflows from the US is the largest. So remittance, the largest is from the UK. So by and large, when rates in the US are very attractive, are very juicy, attraction towards emerging market like Nigeria is always very low, because investors will want to stay within the safe havens. And so, as much as there are higher rates in the US, investors will prefer that than Nigeria. Now, tying down to what Trump is saying, Trump's leadership philosophy is very clear. He wants accelerated growth and he wants subdued inflation, which is like redefining economics law in the real sense, because typically economic theory and data have suggested that there is actually a positive relationship to a large extent between inflation and growth. So when you want accelerated growth, you must also be ready to witness some level of inflation. Because what drives growth? Growth, except for countries that have structural challenges like Nigeria, in countries where there are no structural bottlenecks, growth comes from expanded consumption, expanded investment. And investors are more attracted to, especially those that are setting up business. I'm not talking about those are investing in instruments. Those that are setting up businesses are attracted to countries where they know the political environment is secure and the interest rate there is cheap, so that they can borrow cheaply and set up their business and drive it. And it is in the doing of that that they can employ more people. And as they employ more people, those who have money to drive their ends meet their ends meet, consume, and that's what drives growth. So it's like I will summarize that Trump wants to hit his egg and have it. He wants growth to be accelerated. He wants oil price to be as low as possible, because one of the major drivers of inflation in the US is energy price, and that's why he's influencing the global oil prices as much as possible, even in encouraging OPEC to pump more, because the more the oil in the market, the higher the likelihood that oil price will be subdued below $70, which will be good for the US economy in terms of managing inflation. Now, when oil price is subdued, because their own economy is a very shall I say, is well structured. Credit system is very solid there. It can also help drive growth, which although in the medium to short term can also then lead to a more terrible inflation, because if productivity growth is not as fast as consumption growth, which is what will actually happen, because if you give 10 people money, it's easier for 5, 6, 7 of them to spend it on buying things than transform into a business that will, drive productivity. So by and large, even though Trump's ideology might deliver a sort of, if he's able to push through the Fed, even to cut rates, might deliver a sort of immediate reduction in inflation and growth for the US to boost its political egoism that I'm driving growth and I'm keeping inflation low, but it's like a time bomb. The two don't normally go that way. When you want accelerated growth, you must be ready to see some inflation. And that's why the Fed are very careful, because the Fed knows that when, in an economy where inflation boomerangs, right, you are likely to send more businesses out of business, send more people out of their early grave, than when there is at least mild slowdown in growth. But as for the effect in the Nigerian economy, the more if the Fed should dance to the tune of Trump, for instance, and cut rate by as much as he has requested, which I don't think an independent Federal Reserve will do, the immediate effect could mean that attraction towards fixed income assets in emerging markets might pick up. And we have seen that in terms of numbers, even though official numbers have not come out to reveal the exact number. But based on NGX's monthly foreign statistics indicator, in Q1 and Q2, we have seen more foreign investors participating in the market, because they are beginning to see values. Yield environment in the US is beginning to thin because of so many things. So basically, a rate cut there could be good for investment attraction. It could also be good for remittance, because it then means that an average person there who is also a Nigerian, who is into a business, can invest, can borrow at cheaper price, put it in their business, make gains, and they can easily spread it. But it will also have a negative effect in the medium time, because by the time that then boomerang and turn to accelerated inflation, because productivity is a bit sticky than consumption, then it will backfire. And again, like I said, Trump is trying to eat his carrot and still have it. He's trying to force energy price down, which should have been something that a country like Nigeria should enjoy from, because like this year, our budget benchmark is $75, and 4 out of the 6 months that have gone, oil price has traded below, on average, $75 in 4 of it, which is telling already on our revenue, plus other domestic factors that is negative for. So It's a mixed bag, but I think we just watch and see how events unfold, and we hope our policy makers will be able to adjust on time to get the best out of every situation that the U.S. economy are triggered. But the reality is that when the U.S. economy sneezes, every country of the world catches cold.
Right.
The extent then depend on how the policymakers are able to tinker with their policy variables.
Right. At this point, you need to find that hedge, once you see volatility with the oil markets, because that's our biggest, revenue earner there. But, let's drill it down now to the basics at this point. What are you seeing for inflation in the second half of 2025 for Nigeria and the Naira? Do we still see stability for the Naira or some kind of strengthening?
Let me start from the FX one. I think the central bank has done a yeoman's job over the last couple of months. One of the major drivers of FX volatility in Nigeria, as we can all recall, especially even before this government liberalized the FX market in 2023, let's say what happened between 2018, 2019, after the FX was stabilized around 309, and 2022, what has actually been the major driver, where we have the gap between official and parallel market rates almost about 300 level, is speculation. Now, the CBN has tried as much as possible to suppress that to, I won't say maybe this is the BRS minimum, because I feel for every height you attain, you can do better. But the CBN has done a yeoman's job by improving the transparency in the FX market and the ability to also sustain OMO bills yield at attractive rates has been pivotal to the performance of the Naira this year. Yes, you might say that the Ghana cedi has done better than Nigeria, but the environment differs. So looking at the reserve level, looking at the fact that our import bill, so to say, seems to have gotten some relief, especially with Dangote supplying some certain retail people locally. The import bill in terms of dollar need has also reduced. So if you look at some of those developments, you think that, plus the fact that the reserve is still around $37 billion level, you think that the outlook for Naira in H2 is not bad. We're likely to have it stabilize, even if it's not going to appreciate, because for it to appreciate, there must be a significant carry trade opportunity in Nigeria. There must have been major rate cuts in advanced economies, where those one would now see AME as the next grant. But with shocks around the world, we might not see as much rate cut as most analysts will have anticipated at the beginning of the year. So given that, I would say that the Naira stand a greater chance of remaining this stable for the H2 than maybe any appreciation. But for a major depreciation, that is not likely on the card, except crude oil price crashed significantly below $65, and our production also retreated, because even in terms of oil production too, we have moved towards both crude and condensate to about 1.67 million barrels, which is very good, though we are still far from the budget target of 2.0. Now, concerning inflation, the factors driving inflation, the success on it let me say the progress we have recorded has been diverged. One of the drivers of inflation is this exchange rate, which the CBN has done a yeoman's job to stabilize. But we also have the other factor. That's why I said for countries that have structural problem, the policymaker just have to be on top of their game. We have a lot of structural issue that holds negative outlook for inflation. One of it is insecurity. We've seen what happened in Benue and some major agrarian belts. And one of the things that affected everybody, irrespective of your income class, is food. So with insecurity heightened in those part of the region, that might weigh on food prices, which is not good. And also the recent shock, in the global market concerning oil price briefly had led to some major importers, increasing PMS price slightly. So if there's no energy shock, then the other shock locally, insecurity, business environment, the government, especially the fiscal side, because the reality is that while we are seeing some silver lining from the monetary side, the fiscal side seems not to be pulling their weight very well, because you have insecurity in agrarian belt, you have massive oil theft in the Niger Delta region. Those are the two major sources of revenue for the government to make life easy for the citizen to control inflation. So as long as that is not, being holistically done, then we might still stand a risk of having inflation, weighing on household. But in terms of the statistical number, because what most people will ask you is that what the MBS is saying now, the reality is a bit divergent. And the reason is because of the rebasing. So in terms of statistical dynamics, the MBS's inflation number is likely to remain on the decline, at least between now and say October, maybe a mild uptick in November, and there will not be a sharp uptick in December because of the very low base. At least December, several simulations have suggested that December inflation will be above 32, 33 level, which will be a spike, and that was just because of the rebasing. But how does it affect an average citizen in terms of standard of living? It will affect them in terms of how much they buy food, how much they take transport, how much they pay for drugs, the basic necessity, energy. Now, with the dynamics of what is happening in the economy, even with stable exchange rate, the insecurity that is creeping in or that is becoming more expanded holds negative for food. And once food prices is high, you can't expect people to think that the government is doing, and especially the average person. So by and large, we have, in terms of reality of inflation, there is an upside risk. But we think the federal government, if they pull their weight, address insecurity both on oil and food item, Nigerian can enjoy some relief in H2.
Right, and we definitely need that relief, at this point. But thank you so much, Damilare Ashimi, who is a macroeconomic strategist at AfriInvest Research and Consulting. Thank you so much. Enjoy the rest of your day.
Thank you for having me.
All right, we'll take a break now. When we come back, we're going to head straight to the markets. That's in a moment. Just stay with us. All right, now let's head on to the markets and see what's playing out there. We have Maniete Edet. Great to have you, Maniete. And yeah, we did see that big news earlier, the listing on the London Stock Exchange by one of the top lenders right here in Nigeria. And I'm wondering if investors are reacting to that at this time.
Well, Adi, just like you said, investors are reacting very, very positively. I have it here that GTCO, that's a Guaranteed Trust Bank parent company, it's the stock. Investors have actually raised their interest in the listed entity here in Nigeria, because it's a dual listed entity both on the London Stock Exchange as well as the Nigerian Exchange Limited. So its share price has climbed by about 50 basis points. That's about 0.50%. So, and that's following that news that the company, I'm sure some people are aware of it, but let's just put it louder there that GTCO has announced that it will be listing on the exchange. That's the
London Stock Exchange.
Yes, after raising about $100 million in a share sale. That's not the first time, because back around 2007, GT Bank, that's what it was called back in 2007. They did a GDR, that's what you call a global depository receipt, where they raised about $750 million. But now they'll be delisting that, and then, but they say that GDR, which some shareholders are aware of, that the holders of the GDR can exchange their securities into shares for either trading. That's shortly
Very
after
interesting.
they do that.
We'll keep tracking that definitely, but we're at 121 now. How's other markets looking?
Exactly. 121. Yesterday we closed at 120. That's picking up from 119, which we had seen the markets playing at midweek trading session. But so far, the likes of all the banks as well as all the other sectors are in the green. So far, let's talk more about this market. So at intraday, this is the time is just about some 1:30 now. 0.61% intraday, and the banks, the industrials, the consumer goods, the insurance, as well as the oil and gas majors, they're all revving up this market. And most likely, this figure that you see here is going to go higher because it's still in the green as we speak now. Coming from yesterday, where we saw the market going up by 0.50%, and we had about 59 gainers against 15 losers. So far, that number 50 is still very, very magical, because at intraday, we have 53 gainers against 8 losers. So far, this market is very much in the green, and year-to-date, 16.92%. That's the performance. So the month of July is barely just about barely 3 days according to trading. So we can't do a month-to-date, but so far, month-to-date is still a tad in the green for the market. So we'll be keeping an eye on GTCO, which is listing as a holding company on the London Stock Exchange, and that will be the first lender to do that, and the third, one of the three Nigerian entities to be listed there after Airtel Africa as well as Seplat. So we're keeping eyes on how that listed entity will be doing on the London Stock Exchange. Now look at the Johannesburg Stock Exchange, 0.35% for the all-share index there, 96,000, closing in on the 97,000 index level, and I'm sure that most likely within this month we will be able to see the Johannesburg Stock Exchange all-share index crossing into 100,000 index points level. Now let's look at the other markets within the African region. For the EGX 30, 0.35% in the green, 32,820.49, and the Nairobi Stock Exchange for the close of Wednesday, both of them for the close of Wednesday. EGX is actually on holiday right now. So for the Nairobi Stock Exchange all-share index, 0.82% in the green, and that's closed for midweek trading session, but the market will be opening later today. So now let's make a sidestep away from the equities market into another side of the equities market, but we call it the unlisted securities market, which is almost similar to what we have within the stock exchange or the Nigerian equities market. So now let's talk more about the unlisted securities market. We're still doing that half-year review, second quarter review, and the review for the month of June, which so far in different markets has been quite good, if I must say, across many parts of the world. So now let's bring in the managing director of the NASD OTC securities market, Mr. Ewakide Longe. So he'll be giving us details of the market. Thank you for joining us, Mr. Longe.
Thank you. Thank you for having me. Good afternoon.
Okay, so now let's start first with a review of the first half of the year, as well as the immediate past month. Can you give us just give us the key highlights of how the unlisted securities market performed?
Okay, so far half year, we've seen the market do 10.6% in the index. That is the broad index, the unlisted securities market index, NSI, and the pension index, which is the index we use to measure companies on the NASD that would qualify for pension fund investments, has done 20.86%. The market capitalization on NASD has grown by 88.35%. Trading volumes, I know that when we say 25 billion is what we've done this year, it looks like a drop in the ocean when you're looking at the broader markets, the competing markets. But when you compare it to last year, we were at this point 20.4 billion. So it's been rather positive, especially when you think about what the drivers were for last year. I mean, there was a specific security that seemed to drive activity. That has been replaced by other companies that have come in.
Okay, so now within the second quarter of the year, we saw that the Securities and Exchange Commission, first of all, we saw the ascent of that Investments in Securities Act. So the ISA 2025, which is actually for the capital market and the unlisted securities markets as the NASD OTC, is part of the capital market. So now, how is this expected to? What effect will this have on the NASD OTC market in the second half of the year?
I don't think that. Okay, so I know that breaking news is useful, and with the new regulation, you want to say what is the impact. I think the impact is going to be slow and steady. There are specific provisions in the ISA 2025 that speak to some of the initiatives that NASD has been pursuing, particularly the digital securities markets. We are at this point with the Securities and Exchange Commission considering the first issuance. I mean, it has already been submitted to the Securities and Exchange Commission, and we expect that that should be approved, hopefully. And so we take on the digital securities markets as we have always purported to do and mentioned that it would start. I mean, it is at the point of starting now, but there are lots of exciting things that can then be done with that market. And that's one of the things that the ISA 2025 is promoting. And then there's also the fact of the compartmentalization of markets. So we have composite markets and non-composite markets. In our view, we think that NESD is a composite market, but we need to establish that status with the Securities and Exchange Commission. Composite market because we are not restricted to any one asset class. As a matter of fact, we project ourselves as being the foremost alternative assets listing market in Nigeria. You know, so I don't think that there are many other areas that the ISA 2025 will deal with as far as activity on a market other than what I've said, except of course for other things like compliance, regulation, surveillance, you know, things like that. You know, those are the key areas. I mean, and I guess the fact that they're trying to include other assets, especially the private markets as well. Those are the areas that I think are very prominent in the ISA 2025.
So, Mr. Wakide, I'm sure that the NSD OTC market is poised for a positive start for the month of July, the third quarter, as well as the second half of the year. And we will be keeping our eyes out on how this market performs as we count down to the end of the year. Thank you so much for your time on the show.
Thank you.
Also, Mr. Elwakide Longe, Managing Director of the NSD OTC Securities Market, giving us details about that market. We hardly talk about that market, but we just have to put it because it's part of the capital market. So, Ladi, I think I'm interested.
I'll be interested to see the top gainers in that unlisted market. You know, at some point, I'm sure we're going to dig into that data to see what the best.
Interestingly, some of those, like we have the share, Aradel was formerly within the NSD, but crossed over into the NGX, and some who were in the NGX crossed to the NSD OTC. So it's more like I won't call it cross-capiting, but it's kind of like a movement of markets.
A big movement. Thank you so much, Adete, for all the details for most of this market that we track now. But let's head on to Europe now. We have Lars Holter in Berlin. Hello, Lars. Great to have you. So tell me, what's it looking like today? Is it still just, stability, with the markets in Europe, or are we seeing some big moves?
Yeah, Ladi, not much moving here. Let's do the numbers right away. We have the FTSE 100 over in London, actually 0.5% up, but that's the biggest I can give you right now. We see Paris literally, virtually unchanged at all, and the DAX over in Frankfurt, that's up a little, but just by a tenth of a percent. So, Ladi, we're keeping in a pattern pretty much that we've been seeing over the past few days with markets just not moving much, very low on energies. All eyes are on the United States, and there's a question, of course, there's two topics mostly, whether there's going to be a trade agreement soon between the EU and the Trump regime, and then, of course, there is much talk about the big, beautiful bill, maybe, of course, the most euphemistic, if not misleading name for an initiative ever. It does affect companies around the world, including here in Germany, like, for example, the auto builders, and there's a little bit of talk about that, because they haven't really figured out whether there would be bad or good for them on the one hand with this bill, if it does pass, which is supposed to happen shortly now. There will be no more government subsidies for electric vehicles. On the other hand, those subsidies mostly went to US-made cars, so it might actually even be beneficial to foreign car makers. Anyway, it is all so unclear right now because so many details are still not known, and the companies are still trying to figure out what to make of it.
Right, yeah, definitely. We'll keep tracking to see if they make something of it, at this point. But beside markets now, I'm hearing that Europe is currently under a heat wave. with some areas in Germany and France seeing, temperatures as high as 40 degrees and more. How are you doing today? How warm is it?
Well, here's pretty good because we're in Berlin, which is a bit further up north, but southern Germany keeps seeing the thermometer rise to 39. In France, it's over 40 at times. And, Ladi, while that's not unusual for some countries closer maybe to the equator or so, it is problematic here. We're not used to these kind of temperatures. And now the French government actually has put in place a host of new worker protections. Some are quite benign. Companies have to have heat-resistant shutters on their windows to keep the heat out, or they have to have air conditioning. Now, I'm mentioning that because air conditioning is not as ubiquitous in Europe as it is in some other countries. But there's also some new rules out now that will have a real impact on the economy. Companies are not allowed to let their employees work when it's getting too hot. They have to move working hours towards the early morning or the late evening, and they even have to cut back on working hours entirely if necessary. Now, that could obviously cut into a company's productivity, as does the heat, of course, in general. But that's a price you have to pay to protect your workers.
Right. And how are the companies reacting to these new rules?
Well, Ladi, it really depends. There's lots of companies, of course, who have long taken measures to better deal with higher temperatures. But there are also some that have been fighting it so far, often because it really costs them. Look, there's office jobs, and installing a decent AC system to keep it cool is pretty easy, as is, of course, providing enough water and such. But there are other lines of work, like construction or agriculture, for example, where work is all but banned under the new rules. For much of the day, it is simply too hot to have workers stand on a roof or in a field for the harvest, for that matter. If you're just looking at agriculture, that sector has already seen so much change due to climate change. Cultivation of many foods has changed entirely. Costs are up. Harvest is down. There's more costly extreme weather events as well. So here's yet another way now agriculture has to figure out how to get the job done. Now, in this case, with workers missing out on working hours. However, of course, all these companies will eventually comply, not least because not keeping with the new rules would be costly too. The French government is threatening non-compliant business owners with fines of up to 30,000 euros and even with jail sentences.
Wow, that's definitely a huge cost there. And I definitely hope it gets cooler, going forward. Thank you so much, Lars, for the updates.
Thank you, Ladi.
All right, to the commodities market now. We're observing a fascinating dynamic in the Nigerian agricultural sector there, where the price of cassava has sharply declined by 33% since January, even as overall food inflation remains elevated at about 22.97%. And we've seen this domestic trend there contrasting with notable surge in demand for cassava in the UK, as reported by the BBC. Let's unpack this now with Toju Megzin, analyst at financial derivatives company. Great to have you.
Good afternoon, Eddie. Thanks for having me.
So considering this sharp 33% decline in Nigeria's domestic cassava prices, that's since January, do you anticipate this downward trend to continue?
Yes, I expect cassava prices to actually remain, I expect them to still experience the downward pressures in the short term. As you already highlighted, since January, there's been a 33% decline in the price for cassava. And this is attributed to the surge imports of cheaper alternatives for starch by industrial processors who have opted for cornstarch rather. And this obviously has a leakage into there being an oversupply of cassava in the market. So it is normal that we're seeing a reduction in this prices. The effect that has on farmers is that they have a lower profitability rate, unfortunately. And this also reduces this increases the risk of them losing out on investments, involvements on cassava farming, actually.
And, let's look at implications now. We're seeing demand, rising in the UK there. What impact are you expecting from that?
Well, this rise in demand in the UK actually doesn't bring about any shocks to me. As a former diaspora myself who schooled in Ireland, there are days where I'm craving and missing the taste of Nigeria and just want to drink Gary and with some granules, or on the days where I would like to have eba. So this doesn't bring about any shock to me at all, and I expect that to grow as we see numbers increase of Nigerians, quote unquote, japping abroad. So I feel like in regards to the farmers, this brings about very much so a valuable export opportunity, as they will be able to offset the domestic low prices, with obviously being able to export these products abroad.
Right. So Toju, that means you were drinking Gary when you were in Ireland.
This is down to them. This advantage can only be upheld if the supply chain is efficient as possible.
All right, Toju, thank you so much. Toju Maxon there breaking it down for us, what to expect for cassava prices, and we're seeing rising demand there. Thank you for coming on today.
Thank you. Thank you for having me.
All right, so other top stories now. We see startups in Africa secured about $365 million funding. That's for June, making the continent's strongest month this year and the best single month performance in nearly a year, according to data from startups tracking platform Africa, the big deal. The feed pushed total funding for the first half of 2025 to $1.35 billion, representing a 78% surge against the $800 million raised in the same period last year. All right, let's look at other conversations now. We see operational excellence is emerging as a critical driver of growth for Africa's evolving fintech space. They're enabling companies to navigate complex regulatory environments, diverse consumer needs, and infrastructural challenges. As the continent's digital economy expands, fintech firms are focusing on building robust, scalable operations to meet the increasing demand for financial services. That's rising right now in Africa. Joining us to unpack this, we have Lasbury Oludemi. She's the Vice President of Global Operations and Managing Director of Yellow Card Nigeria, joining me via Zoom. Great to have you on the show.
Thank you, Ladi, for having me.
Yeah, so we're seeing so much talk there about fintechs and capital raises so far, but let's look at operational excellence now. It might mean different things, for different people and different companies at this time. Help us break it down, for us in this fast-moving fintech space.
Thank you so much, Ladi. I think for me, operational excellence is a strategic business mindset, right? And the focus is on consistently improving business operations to achieve superior performance and also driving sustainable growth, right? Operational excellence it all involves optimizing processes, reducing waste. Currently, we're hearing what people are doing with AI. And you can imagine how much AI has saved so many fintechs, so many startups, right? That's operational excellence. That's what we're looking for. It's also involved in enhancing productivity and aligning all aspects of the organization to deliver value to the customers, employees, and even the stakeholders. If your business is not delivering value to the customers, then you don't have any business to operate, right? So that's all about operational excellence. I think for African tech ecosystem, it's not just about process efficiency, it's about adaptability at scale. You may ask, what does that mean? Yeah, it's all about, or it refers to the organization's ability to adjust and thrive in the face of challenging circumstances. Yeah, there are so many things that can come our way, but you need to build something that is able to adapt to changes, but doing so efficiently and effectively across board. For us, this environment is quite dynamic, right? We see so many things come up every month, every quarter, every year. So excellence is just all about building systems that can quickly respond to changes. It might be regulatory changes. It may also be some infrastructural challenges, right? It may also be customer needs across diverse markets. You remember during the COVID era, when we had the cashless policy, you ask yourself, I want to do a transaction. What do customers really want? You see some fintech within the banking sector that really took it up and ran with it, right? And today, every vendor on the street has an account with those fintech banks, right? Unlike the traditional commercial banks, that's all about operational excellence, right? You need to build something that can withhold change. You need to build something that can always add value to the customers, to the consumers, irrespective of the changes or the environment where you operate in. That's all about operational excellence. Yeah.
Right.
And this should be like a foundation. This should be like a foundation when you think of building something. You don't just build. For those of us in so many markets, we don't build for uniformity. We understand that markets are different. We understand that the consumers are different, and we understand that the environment can change, right? So it will really be helpful. It will help your business if you have all these in mind, right? For us at Yellow Card, it means creating a foundation that supports rapid improvement without sacrificing compliance or maybe customers' trust or long-term sustainability. So when you have a product, when you think of doing a business, well, when you think of establishing a business, what you should have at the back of your mind is, what is it that can I build that would be able to withstand changes in the ecosystem, that will be able to withstand regulatory changes, or even the appetite of the customers, that would help you to have something that will stand the test of time, right?
Right.
I'm always amazed each time I listen to one of us speak about what we have, right? He describes the infrastructure as Lego, and he always say you just plug and play. What does that mean? You already have the foundation, and whatever you think your customers need, whatever you think the market needs, right? You can always bring it on board. You can always build for it because you have the foundation. That's all about operational excellence, Ladi.
Yeah, and it's quite interesting. You keep getting hearing headlines of some of these fintech companies actually folding up after 5 years or even less. Some of the time. So, what would you say are some of the operational challenges you've observed across the continent? Leading your organization.
Okay, Ladi, I think that the biggest one is regulation, right? Because of the space we operate in. And you can also see for different markets, different regions, there are different stages, right? You see some markets that already have a regulatory regime. You also see other markets that are already doing some sort of sandbox application or program for players in the ecosystem. You also see some people that already are they're already drafting their regulations. So I can say regulation is the biggest for anybody trying to play within the system. And you should be able to understand the regulatory space. You should also be able to have a very strong tie and relationship with the regulators. I think stakeholder collaboration is key. Regulatory engagement is key for every one of us if you need to overcome this challenge. Another thing we have also seen is the issue of infrastructure. A good example is the mobile money adoption. If you look at what we do, right, you definitely need that leg, that rail to give value to the customers. And mobile money plays a key role in that process. Yeah. If you look at the way we have, what we have done with mobile money is totally different from what is obtainable in the East African region, right? For every transaction, every vendor, you can easily walk into a store and you pay with a mobile money, right? Unlike in the West Africa where we're still doing bank transfers and all that. So I can say that every region, every market has its own special challenges. But what will really help every startup, every fintech, is to understand the local nuances and also have a robust regulatory relationship and have a product that is flexible, right? You can always tweak at any time to fit the markets, to fit the regulatory requirements. I also remember that in the case of KYC, not every market has a strong central verification system. And for you to do well in this ecosystem, KYC is key. So if you can see that we have different challenges in different markets. It might be one particular thing might be good in this market and you struggle with it in the other markets, right? Like what I said before, you need to understand the market. You need to understand the local nuances. you also need to have a good relationship with the regulators, and you need to build a product that is flexible enough to adapt to changes, right? It's not all about rolling out a product. It's not all about building a business, but you also need to understand the environment you play in, and you try to putting things in place to support your growth.
Right, and talking about growth, you always see some of your companies there, operating in different, regions, at the same time. How do you manage that?
I think the best thing for us, the best thing we have done is to localize operations, right? So if you're thinking of playing in this system or this space, you need to localize your operations, except you just want to operate in one market, and which is also not good for startups, right? Because the environment may not be good enough for you to grow. So if you're thinking about growth, you should also have the mindset to try and launch in so many markets. Like for me, I think what has really helped us is to be able to first have a good infrastructure. First, have a good system, and for everything we have built, we always have best practice in our minds, right? And what will really help you expand to other regions is if you're able to kind of replicate whatever you have done in one market that has worked into another market. That would help you operate. That would help you grow in those markets, and that would also help you move faster in other markets where you want to operate in. So it's all about considering, it's all about thinking of, it's all about growth. Once you have that growth mindset and you think of what will help you grow, then you sit back and you put them in place. Right. For us, it's not a big challenge at all. And if you also look at some people in this space, a good example is some of us in the Nigerian market. Right. Some years ago, we had a policy statement, and some people went down, right? Because they didn't have that growth mindset. They did not expand beyond Nigeria, right? So you should be thinking outside certain markets.
Exactly. Well, so much to unpack there, and definitely this will be an ongoing conversation. We will definitely run out of time at this point, but we'll definitely pick up so you can share that wealth of knowledge with us, at this point. Thank you so much, Lansbury Oludimush is the MD, Yellow Card Nigeria. Thank you for joining me today.
Thank you, Ladi. It's always a pleasure to be here.
Fantastic. All right, so, looking at the markets now, not looking so bad there today. Definitely we'll keep tracking that. We're seeing Bitcoin there challenging that 110,000 level. We'll see if it breaks, continuing today. But that's the show today. Thank you so much for watching. I'm Ladi Williams. From me and the team right here at Channels HQ. It's bye for now.